Today, Bitcoin prices recover from overnight declines. Singapore's central bank teams up with financial giants to test tokenization, and Ric Edelman, founder of the Digital Assets Council of Financial Professionals, weighs in on what's driving crypto prices right now. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Digital currencies bouncing back from a sell-off overnight. By noon Eastern, Bitcoin traded above $36,000 again, while Ether traded above $2,000. Solana, meanwhile, jumped to $62. Okay, let's talk about the top stories. Singapore's central bank is teaming up with major financial institutions to test tokenization. The Monetary Authority of Singapore announced on Wednesday that it's partnering with Citi, T. Rowe Price, and Fidelity to price and execute bilateral digital asset trades efficiently. BNY Mellon will test cross-border foreign exchange payments, and JP Morgan will collaborate on the use of digital assets to streamline investment and management of alternative assets. In total, 17 financial institutions are a part of the program, and it's yet another example of the financial industry dipping its toe into tokenization once again. Next, blockchain.com just raised $110 million in new financing. The crypto platform announced the Series E funding round on Tuesday, which was led by Kingsway Capital and includes Coinbase Ventures. Now, Bloomberg reports that the funding round also cut the company's valuation way down from its peak of $14 billion in 2022. Blockchain.com was started all the way back in 2011 and says it has more than 40 million verified users. Last, the National Hockey League is diving into the world of NFTs. The league, the Players Association, and the Alumni Association announced on Wednesday that they're partnering with NFT platform Suite to offer a digital collectibles service called NHL Breakaway. Fans can collect and trade digital collectibles and earn rewards, and the NHL is joining the NBA and NFL and other pro sports that have launched NFT collections. Of course, interest in NFTs has declined from its peak in 2021 and 2022. All right, back to markets for our main story. Crypto's recent rally comes amid all the crypto ETF hype. Crypto World's Talia Kaplan spoke with Ric Edelman, founder of the Digital Assets Council of Financial Professionals, about whether those ETFs are already priced into markets. He also provides his outlook as it pertains to all those applications for spot Bitcoin and Ether ETFs.
This month, Ether topped the key $2,000 level for the first time since April, and Bitcoin reached an 18-month high after BlackRock took initial steps toward filing for a spot Ether ETF. What do you think was behind the recent rally, and what's driving the latest crypto action?
Well, everybody is excited that we're beginning to see really serious levels of institutional engagement in the field of blockchain and digital assets. This was most notably observed when BlackRock filed its application this past summer to launch a spot Bitcoin ETF. Shortly after BlackRock filed its application, 8 other companies did the same, including Fidelity and Global X and Franklin Templeton. Some of the largest players, as well as Wisdom Tree and Van Eck, all did the same, with the attitude that since BlackRock is playing, it looks like the SEC will take a different tone. So there's been a lot of excitement about this. With all of that activity, it caused the price of Bitcoin to rise dramatically. Bitcoin was hovering around 25,000. It's now, as you said, hitting 37,000. So it's reflective of the fact that Larry Fink, the CEO of BlackRock, has called Bitcoin transformational, that it is going to revolutionize global commerce as we know it. When Larry Fink says something like that, you kind of have to pay attention.
And there's certainly a lot of hype surrounding crypto ETFs right now. At least 9 asset management firms, as you noted, including BlackRock, Wisdom Tree, and Valkyrie, are waiting for SEC approval to issue a spot Bitcoin ETF. This week, Cathie Wood's ARK Invest launched 5 new digital asset ETF products in partnership with 21 Shares. So what are the implications of these developments for crypto?
It's very bullish. Bitcoin and crypto in general has been in what we've called the crypto winter for the past 2 years. After hitting its high 2 years ago, Bitcoin fell from 60,000 all the way down to 15,000. And a lot of people have lamented that this technological innovation was nothing more than a fad. At the same time, during this period, we had massive amounts of fraud and scams. We had a lot of collapses of crypto companies, Terra Luna, Sierra, and many others, and of course, culminating in FTX. With Sam Bankman-Fried being arrested and now convicted on every count charged, he faces more than 100 years in prison. He's proving to be the Bernie Madoff of crypto. So in all of this environment, there was a lot of negativity and a lot of despondent attitude. But along come now, over the past couple of years, we're seeing that major Wall Street firms are engaging in new spectacular ways. JP Morgan, for example, has launched its own blockchain called the JPM coin. They are now settling $1 billion of transactions a day of cross-border currency settlements. Citi has its own Citi coin. Visa is now working with a stablecoin provider in assisting it in transferring transactions on a global basis at a much rapid pace using the secure nature of blockchain technology. We're seeing incredible amounts of engagement by not only Wall Street firms, but also Fortune 500 companies. Starbucks is using blockchain technology in the delivery of its loyalty rewards programs. When they want to offer you a coupon for a free cup of coffee, they're sending you an NFT in order to do it. The Norwegian Seafood Association, Breitling, the luxury watch manufacturer, and Parmigiano Reggiano, one of the largest manufacturers of cheese in Italy. All of those organizations are using blockchain technology to thwart counterfeiting and fraud by marking all of their products with an NFT so that you can trace the source of the product, the legitimacy of the product. In the case of Breitling, you can track the provenance and the entire repair and maintenance history of the watches, helping you gain confidence that you're buying something legitimate, real, and in good order. So you've got a disparate array of companies that are using this technology. It's still in its infancy, but we're beginning to see indications of real-world uses. And some companies are making a lot of money at this. Nike last year earned $200 million selling NFTs of its athletic shoes. So we're finding companies such as Dolce & Gabbana, Tiffany, Burberry, and many others all selling NFTs that are digital online versions of their clothing, and they're making massive amounts of money doing it. NBA is selling Top Shots, NFTs of its athletes. We're seeing recording artists. Lady Gaga held a concert in the metaverse using blockchain technology. So this is all pretty exciting. And this is why a lot of people are having a renewed level of interest and optimism in the technology, and more importantly, in the investment opportunities that this represents.
Now, experts say the first approval for a spot Bitcoin ETF could come early next year. Do you think the potential approval of a spot Bitcoin ETF is already priced into markets?
No, I don't believe so. A lot of it has, but not all of it, for several reasons. Number one, I think it might happen before the end of the year. The SEC has a January 10 deadline for approval of the ARK ETF, and then the others follow in a domino effect after that. I believe the SEC may act prior to the end of the year on these decisions. And the widespread attitude is that the SEC will not say yes merely to one. They will likely say yes to many, maybe all of the applications all at once, on the theory that when you say yes to one, you give them an unfair advantage in the market. If you say yes to 9 simultaneously, you're forcing them all to compete. That competition is good for the investor. It'll lower prices, improve transparency. So we're expecting the SEC to say yes to many, possibly, I believe, probably before the end of the year. Will this be, is it already priced in though? I don't think so. And the reason is that there's still only a very small number of people engaged in Bitcoin and crypto generally on a global basis. It's about 50 million Americans, an all-time high, but about 425 million people around the world. That's only 5% of the global population. And although here in the US, we're paying a lot of attention to the SEC and the new Bitcoin ETF, that is uniquely a US thing. That's not a global thing. In other words, nobody in Europe, nobody in Asia, nobody in Africa or South America cares about the SEC here in the United States. They're looking at other factors. And one of the factors they're looking at is the upcoming Bitcoin halving. Every 4 years, the number of Bitcoins that gets produced gets cut in half. And that next halving, the last one was 2020, the next one comes up in 2024, and about 6 months from now. That has always been accompanied by a dramatic increase in the price of Bitcoin. The market has not priced that in at all. So between all of these technological innovations, the rapid adoption of mainstream America, the engagement of institutions, the involvement of Fortune 500 companies, the coming Bitcoin halving, and icing on the cake, the introduction of a Bitcoin ETF by the SEC, there are a lot of reasons why a lot of people are very enthusiastic about the future price of Bitcoin going well into six figures. So the fact that Bitcoin is now at around 37,000, that is nowhere near a fully priced in future expectation for Bitcoin.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.